Good morning and welcome back. This is going to be episode one of the net worth series, which at least that's what I think I'll call it, which is just going to be me running through all my assets and liabilities line by line and discussing performance for the quarter as well as how I'm thinking about them and my strategy on a go forward basis. So, pretty much just how I'm plotting and scheming to get to the bag. That's what this is going to be about. So join me on my drive. I'm going to be doing this while driving to work, and so this has to significantly increase my chances of getting into a crash. So we'll see what happens. I've got a nice little handy paper here because I'm using this, using my phone for this. So yeah, we'll just take it line by line and let's get into it. The first thing that I'm going to mention in terms of the update here is my IRA, but I'm actually going to group my IRA in with two other traditional brokerage accounts that I have because my IRA and these other two brokerage accounts essentially make up one combined portfolio. So, on the list here, I've got my IRA at about 24.7 thousand. I'm going to round these numbers as well, but it's around 25,000. And then the other two brokerage accounts combined make up around 28,000. So I'm not sure what the math is on that if you add those together because I cannot do simple math quickly. But it's around $50,000. I know that much. Those three accounts pretty much make up all of my actively managed stocks, at least in terms of like long-term holdings, anything that I actively, you know, manage is going to be within those accounts. So in terms of performance for the quarter, wasn't actually too bad. I was up the whole all those accounts combined was up about, I can't remember. I want to say it was somewhere in the single digits. I'll put it on the screen. I'll put all the balances and stuff on the screen, but yeah, it was something like mid single digits that I was up while the market was down. I think mid single digits or so. So not bad in terms of performance, but my rationale there behind choosing stocks, I kind of wanted to go on a little tangent. And there was a dead red bird back there. That's sad. But I wanted to go on a tangent because anytime I tell anyone that I actively hold stocks, I feel like I have to defend myself immediately after. Uh, so you know, I guess it's more me, but so I just wanted to explain why I feel the need to pick individual stocks when everyone kind of knows that it's statistically not likely to work out, like you're probably going to underperform. But I mean, no, even with that said, like there's one chart specifically that kind of really speaks to me, which has been published by multiple large financial institutions at this point. I'll see if I can find like a recent um, article on it, but it's essentially a chart that shows the forward 10-year performance of the market at any given valuation. So I haven't looked at it in a minute, but last time I looked at it was a couple months ago or maybe a few months ago, and it looks at the forward PE of the market and what the implied 10-year return is from that valuation. And I want to say we were pushing like 30 times earnings on forward earnings maybe on the S&P, which implied like a -5 to +5% return annually for the next 10 years. And that +5% is not, that's the high end. That means that, and this is over decades of data. So essentially anytime the market was valued, where it was a couple months ago, and I'll put it on the screen what it is today. I'm sure it's still not good. It might even be worse. But anytime the market's valued where it was, the best case, like the high end return, is 5%. It had never been over 5%. So if you're lucky, you'll get 5% a year is essentially what it's looking like to me. And that's why, I mean, I feel like that kind of, explains, like, I want to make more than 5% per year for the next 10 years. That's my rationale. So I don't know, for sure that I'll be able to do that. I'm aiming for much higher than 5%. So I feel like if I am even okay at this, I'll probably do, more than 5%. I don't know. We'll see. But, that's my thinking behind it. Now, if your time horizon is, 20 plus years, then I don't think it really matters anymore. At that point, I would say, even myself, I would probably be buying an ETF. Now, I am, you know, it's not that I don't think that I'll be investing money 20 years from now, but like I'm gonna need some of the money that I have, as well as the fact that, like, even if I didn't need it, I would still want more than 5% for the next 10 years. And if I thought that I could do that, which I think I can, then I'm gonna go for it. So all that out of the way, um, there's probably more that needs to be said there, but I'm just gonna leave it at that. Um, and I have tracked my performance actually for more than, I'm just starting this, but I've been tracking my performance for 3 years now, and I'll put that on the screen. And shocker, what do you know? See, this is just the cherry on top to everything that I'm saying here. But I have underperformed the market. Thank you very much. I have, and that's okay, because not by much. So, and you know, actually annualized since the beginning in 2023 when I started, I think I've done, I want to say, I just looked at it for this quarter at some point, or maybe that was last quarter, but I had done 12% annually over 3 years. And I'm not complaining about that. Now, it's not great when the market's done more than that, but yeah, I have underperformed. But, I feel pretty good about where I'm at now. And again, it's like slight underperformance, so we'll see. The market hasn't really, it just dipped a little bit in Q1, but going into Q2, it's already right back basically at all-time highs. So, I still feel like the market's cooked for the next 10 years. So not much has changed there in terms of my thinking, or my beliefs at least. So that's the actively managed stocks, and I'll even put the portfolio on the screen of the individual names as well, and their respective weightings in the portfolio. And it's a very concentrated portfolio. I mean, really anyone would look at what I'm doing and probably say that I'm an idiot, and I understand that, and that's fine, and I might even agree with you. But the top two stocks do make up 75% of the account, so the account's really riding on those two. And then the bottom 25% is like three different securities. So really some concentrated activities going on. And I can't really justify that other than to say that I just really believe in those companies. So yeah, I feel like I've got a pretty good thesis backing those larger investments, and I feel like it'll work out. I feel like it's a fairly low risk, high reward situation. Even if it doesn't work out, I probably won't get rinsed. So that is where I stand. So let me move on, because I'll just keep going if I don't. So that's the actively managed stocks that make up, roughly half of my net worth. That's the Q1 update for that. The next thing on the list would be my trading account. Now this is a, still stock trading account, which was sitting at, I don't remember if I even said the last ones, but the trading account is at $38.4 thousand. And Here we go. Man, I should have brought a water. So trading, I've been trading small caps now for a few years, and if you're in the space, it's weird because I guess, in doing these, I'm gonna jump like all over the place in terms of, you know, the uh, the things that I'm doing at any given time could change. I mean, right now it's all kind of like, it's trading and investing and stocks and stuff. But I don't know. I was just thinking of who this would even apply to, because it's probably gonna get freaky at some point. I'm gonna have different, initiatives going on, like different ways that I'm trying to finesse, and get and make money. So I don't know, the people that would be interested in investing would be interested in trading. Probably not. Interestingly, those two groups are usually really not crazy about each other. I've found over the years, but nonetheless, if you're in the trading space, you know that it is garbage right now, or at least, I mean, I shouldn't generalize, but like it's hard not to when everyone, literally, like everyone is like complaining. Typically, you have these periods where the trading space gets pretty, I don't know if I should say toxic, but like people start to complain a lot, and then that's when you kind of see a shift and things get a little easier. It's like you can kind of see the money being worked out to where, like, it's like you're seeing the competition get worked out a little bit through the complaining and everything, and then things kind of shift back and you can make a dime here and there. And it's these cycles, and it always probably will be, and that's fine. I understand that, but Q1 26, it's like, where's the cycle? Because it's terrible. I don't feel like anyone's making money. Even like some of the greatest traders, that have like, images, I guess you would say, like reputations online, are like, yeah, this is garbage. We're not making, no, it just seems like no one's making money. So, that's been kind of frustrating, especially considering that, like, even when I do make money from trading, it's not much. It's like the least the market could do is give me a consistent buck here and there, but I understand that's not how that works, and that's really probably a terrible mentality. So, and it's not realistic. But it has been brutal in Q1, and I'm actually not even sure what the account was at. I'm kind of using this as like to get a clean slate, refresh everything. Going into Q2, I'll probably reference Q1 more. Oh, I'll tell you one thing though. My trading account. So in February, I actually took the first ever withdrawal from my trading account, which was dope. And I withdrew $2,000, so that reduced the balance that much. But I think, yeah, I just don't know where it started. I probably am down like $1,000 or $2,000 in that account from like the start of the year. So not not great, but like my style of trading is one that is very contained, I would say, like upside and downside. Like I'm just a very consistent kind of, like, I don't have crazy swings up or down typically. I really should probably work on that. I need to, like, I don't know. I need to be better about having, more risk on at specific moments, and like, increasing, even, whether it's up or down. I should probably be having bigger account swings in terms of like value. But in times like this, it's like it's kind of hard for me to feel bad about it, because everyone else seems to be getting absolutely hoed, and I am not having fun, but I'm also not getting like destroyed. So yeah, I don't know. It's been an annoying quarter, but I'm not. It's more frustrating than anything. I haven't lost a ton of money, but small caps are just tough, man. And like, I don't know. Then you got the PDT rule changing. Apparently, they're dropping PDT, so maybe that'll free up some of my cash from that account. Um, that would be nice. At this point, it's like, I don't know. I was kind of thinking maybe when that happens, I would shift some of that money to uh, my other accounts that I was just talking about with all the stocks, and maybe I'll just add to my long-term accounts. But I'm not even sure about that at this point. Silver lining, I'm not getting taken out back by the market every day, because at some point I just stopped trading because I can't make any money, and I realize that, and I'm not gonna fight, you know, market makers and algorithms all day and try to make money when it's just like basically impossible. So hopefully that can take a turn for the better at some point. I spent the majority of the time talking about those two because those two, when I say those two, it's just like actively managed long-term account and the trading account is what I mean by that. Because those two make up the majority. I mean, what is that? That's like 50,000 plus 38. Yeah, I mean that's most of my net worth right there in all those accounts. So my, net worth performance is going to largely depend on those few accounts. So I feel like it's worth spending most of the time on those. And then beyond that, I mean, I have my charity account, which I'll put up, which has $7,500 in it, and that's just money that I passively invest that will, you be used in a charitable way at some point down the line, when I'm much older. But I want to let it compound, and see, that's money. Going back to what I was saying earlier about, time horizon, that's money that I'm okay letting sit in the S&P 500, because even though I don't think it's going to be good over the next 10 years, that is money that I'm not planning on touching other than just adding to it for decades. So like, you know, time it doesn't matter as much. I don't know how to just had a stroke basically, but I don't know how to say it. Beyond like 20 years, things kind of average out, and like even if we do have a lost decade where we have no returns, um, 30 years from now, it's not going to matter. So things will average out. So not much to say there other than, I'm just going to steadily add a percentage of my income to that account. And it should just slowly grow. So that's the charity account. And then I've got gold and silver still. I've got some physical gold and silver. Again, I mean, that was gifted to me. And so it's just one of those things where it's like, it wouldn't, I would sell it in a heartbeat if I'm honest, but you know, is that the right thing to do? I'm not sure. So I'm just kind of sitting on that for now. And if prices of gold and silver go back to all-time highs, which I don't really have an opinion on whether that's going to happen or not. I think it's possible. I wouldn't say that I think that it's likely. Certainly not for silver, in my personal opinion. And that's just, from the perspective of a trader first, it's not even like fundamental, knowledge. That's the thing. It's like I know nothing about gold and silver markets in terms of like fundamentals, but just from a technical perspective, I would be very surprised if silver just reclaims highs and keeps going. So if that happened, maybe I'm selling some of that. But other than that, I mean, I don't know. It's just sitting there. So that's that. Cash and savings is about 3.2 thousand. You know, not much to say there. There's obviously a need for cash at any given time. And that brings the total assets to $109.4 thousand. So there you go. There's my assets for Q1 2026. And then under the liability section, I have a Chase credit card with $191 on it. So forgive me for that. I just really don't like debt. I also really haven't needed it for anything, thankfully. That Credit card balance lowers my net worth to $109,200, and those are all statement balances. But that's my net worth at the end of Q1 2026. And I don't think this is going to be a very cool thing right now because I'm just getting it started. I need to get like at least a year's worth of these logged in, and then we can kind of start to see the chart, the upward sloping. Hopefully, maybe not over a year. It might take even longer than that, but eventually I'll have a nice upward sloping net worth chart, and I'll be able to look at that every time I do this and say, this has been worth it. This has been a worthwhile endeavor. But that's not going to be this episode, sadly. So it is what it is. But yeah, that's my net worth update, Q1 2026. Thanks for being here. Thanks for listening. And I'll see you in Q2. So, yeah. Until then, good luck. And I'll catch you next time.